Welcome to the 5th episode of Tech Wealth Chronicles, a podcast about real people, real stories, real wealth. We have all known about CFOs shaping billion-dollar organizations, but what happens when they shape their own family finances? So today we are having two special guests in our podcast, two chartered accountants who have navigated their careers, their family, their finances, and shared their path across their entire journey, but possibly are having different money beliefs. So let me introduce our first guest today, Lakshmi who is the founder of firm Ardra Organics, which is redefining the sustainability and agri-farming at this point in time, but who is a chartered accountant by profession and who has worked across some of the largest multinational organizations such as Hewlett Packard, Wipro Consumer, Philips, and ICICI Bank. And along with Lakshmi, we also have Prakashan, who is the current CFO at Lead Squared, a unicorn startup out of India, but who has spent more than 2 decades with some of the largest global multinational IT services organizations like TCS, like Wipro, and who has also worked across multiple geographies all around the world, including Middle East. So a very warm welcome to you both, Lakshmi and Prakashan, and joining us as our guests in this particular podcast.
Thank you, Vinay, for having us in the show.
It's been an immense pleasure. I mean, this is something that I've been personally, looking forward to it for quite some time. Specifically because, and I was talking to Lakshmi just before we started the podcast that both of you are chartered accountants, both of you are finance professionals, something which is also very common with, my personal family. Shejal and I are both MBA in finance as well. And we were sharing like what happens when you have those kind of in similar professions. Is there more conflict or is there more alignment in your day-to-day world? Of course, Shejal thinks very differently about alignment, but would like to maybe get started and understand your ideas in terms of how do you see two CAs, living under the one roof?
So Malay, I think money for both of us, we look at money in the same perspective to start with. I think we both have very the middle class upbringing, like what most of the Indian household was during our upbringing days. So for us, money means that, we know the monthly money comes in, mom sits in budgets, and then she looks at what the month-end savings were, or do we have any savings at all. So we have seen how much valuable it is. So in our growing up years. So I think the philosophy of money has been pretty much around the same philosophy for both of us. That way we have not seen conflict. But as we have grown through our career and where we have reached a stage where, sometimes he thinks that you still need to be frugal, and sometimes I think that there are certain experiences that you should get in life where you might be not so as much frugal as possible.
And then, of course, I mean, you have both very accomplished career profile. As you rightly mentioned, yes, we all come from that middle class background where slogans and our early thoughts and beliefs about money shapes, how we look at, the wealth management over a longer term period. But maybe Prakashan, let me ask you, I mean, potentially your early beliefs about money as well, about how do you look at wealth? What kind of value system you have imbibed yourself, and potentially the value system that you are imbibing in your, next generation as well?
See, the same like Lakshmi said, right? It's the middle class upbringing, right? Father, he was in Air Force, so he sent every month the money here. So mother takes it, she knows exactly how much money the money order will come. That time money order only gets, how much it is get. And there's a fixed expenditure, right? Including how much schools and the provisions and EMI of the house, all those kind of a thing. It's very, very clear, right? And so after that only, any other, whatever you call this, indulgence. There's no restaurant, movie, none of those kind of a thing at that point of time, right? Maybe one dress or something, that is the biggest indulgence you can get it, right? So because always consider money as something like, it needs to not be something to splurge. It should be used carefully, right? I don't know, nowadays kids can imagine that, right? I used to get 10 paise as the pocket money, right? 10 paise, that's it, right? That's what per day kind of a thing. So we know that how important that, even that, and keeping that particular thing, saving. So it went that way. So what I tell my kids also same, right? Maybe today, obviously one of the challenges like, we have decent, right? You don't need to go like, kids will see a much bigger pocket money and all this. I would say like, was pocket money that doesn't need to spend. So save it, right? Open a small savings bank account. Both the kids, when they are small time itself, they have separate savings bank account. Was there. My eldest son become 18, 19, right? That time I also told him like importance of compounding. Because I learned about compounding impact much later. So just feeling like open the Excel and see like how you get over a period of 10 years, 20 years, how you get.
And that's, I mean, traditionally has been the only path of wealth creation, for families coming in from, middle class background, is compounding really is the one which creates the wealth for you, right?
So earlier I didn't know, like now we are telling, like now to tell him like compound doesn't mean like you need to get some 10 lakh or 20 lakh or 50 lakh salary to start saving, right? Even if you get 20,000, right? How much you can get, how much slowly you get it, how that itself will compound after some time, right? All those kind of things. Yeah, that's it.
But tell me, I mean, and I'm just curious, since we are touching a point on the family and the values and how, how we thought about saving and spending and how kids think differently about saving and spending, in this age when, convenience is paramount, Zomato, Swiggy are at the fingertips as well, how you are seeing kind of the habits changing, right? Because today, we used to stand in line and queues, to even make railway ticket bookings. Now everything is online on mobile app, spending becomes that much easier. So how do you see that change, especially with kids? I mean, I understand the saving part, but I also want to understand the spending part. I mean, how do you see that?
So I think today the kids have not seen what is it to live in a constraint. We know what it is to be in a constraint, but they are living in an age of surplus. Yes. So for them, everything is available in abundance or in plenty. So it becomes all the more important to show them that, of course, we have to go back to our age and then tell them. So it could be a common household myth or what the kids would say. The parents keep saying that, we used to walk to school. We lived our lives like this. Yeah. It could be a very household macronym that people keep saying, but we still have to say that. We have to make them understand that it doesn't come for free. So whatever you're getting today has a cost to pay. And that cost is something that you have to earn it. So that is something that ongoingly we keep saying, at least at the house level, when they have a demand for something, when they need something, we say, and at times we also try to associate it to a result to something. Okay, you do this, then you will get this. It is not a freebie to you. So whatever they need to get needs to have a sense of achievement. So unless you have that sense of achievement, I don't think you will be fulfilled also. And of course, we keep saying that if your pocket money is 100, spend 70 out of it. We're not saying anything. You can spend 70, but ensure that 30 goes into the bank, because there might be a need at later point in time, and we are not going to give you that, but you might need it. It just could be for your school project, but you're going through a punishment zone, so we're not going to get you that. That's when it comes handy, and these are life lessons.
So Lakshmi and Prakashan, both of you are chartered accountants, both of you possibly are all trained to think in terms of numbers. But if you were to go back and think about your first major financial decision, right, as a couple together, how did it look like? Was it arrived through logic? Was it arrived through debate? Was it a compromise? Maybe just if you can talk about one major financial decision that you guys took together in your life.
2-3 years down the line. So when there was I think one major decision we wanted to take was, we had a small family. So the Adarsh was born and he was about 1.5 years. So one decision we had to take was, the first purchase in terms of assets should be a car or a house.
Wow.
So one was an appreciative asset, the other was a depreciative asset. That's the way I saw it.
Classic chartered accountant.
So for some reason, for me, I always was a person who believed in real estate. For me, real estate always attracted. So I said that we should take a house first, right, before we get into a car. So that is something that I remember both of us had debated a bit, because we had just moved into Bangalore, and Bangalore was a place where it used to rain almost every other evening. So the need for a car was more at that point, a particular point in time, we thought. And we had moved down from Muscat where we had a car, and so we were debating that, what should it be. But I said, first let's block the house. Once we've decided we're going to be here, and then we'll move into the next purchase. So I think that was a big discussion we had at that point in time.
And was it an aligned decision, Prakashan? Or?
Yeah, it's not big, it doesn't mean we are discussing for months. And for one thing, we debate and we fight a lot on many other things, which movie to go, which food to do, how to cut the vegetables, how to do all those kind. There'll be a lot of fight and all the things happen. But touch wood, as far as finance and all these things are concerned, it's not such a long this thing, right? You obviously debate whether to buy a car, and both of us are not very. It was not car is okay. It's not daily we are taking car and going out and all. Even if anything is there, take an auto that time, right? So all those things were there.
Nice.
We thought okay, makes sense. It's nothing else though. Forget it. Thanks. She was working with ICICI Bank. Funding was not a great. It is not like we had a lot of money to invest and all. So we are only looking at what is the minimum down payment. That is what you need to get it. It is not like we sacrifice a lot and all. It's okay. That time, car without car is also it's fine. Yeah.
So you mentioned you fight on a lot of other topics, but on this topic you were absolutely aligned. But I just want to ask one more follow-on question. Just when it comes to finances, right? Like between two of you, is one more like a saver and the other one is a spender? I mean, just curious to know, how do you split financial responsibilities?
I think in our case it's slightly unique because both the things I do.
So you're completely outsourced.
Yes. So he wants to take the least of responsibilities when it comes to whatever is at household level. So right from the beginning, I think I've been doing both.
Oh,
I don't think term is not right. It is responsibility and not. See, if somebody is happy to do, we don't want to interfere too much.
Right.
Right. That is the approach. Every place will take it. Right. See, generally there is a lot of calculation work and saying everything you have to do in office work itself. This is need a certain things. And it is not like initially it was relatively easy also. It's not like we are earning a lot. So we didn't made anything from taking from our parents or anything. Whatever we build it, everything from our
was all organic. Yeah.
so absolutely no assistance from anyone or some of those kind of a thing. So initially when you take a house, right, after the salary, the EMI and all those, it is pretty fixed.
Yeah. It's very structured. Yeah.
It's very structured that way if you look at it, right? So whatever, subsequently anything which you have taken. So it's only initial decision. Then our principle is more or less little, conservative thing. You have a revenue, this is your saving, okay, balance you are able to spend. I am not taking we never till date in the last so many years, not even a single time we missed a credit card payment. We are not taking even a single short-term loan, single person loan, right? None of this. 0 paisa we are given on that.
I just would like to add to it. That's something that both of us firmly believe. That we should be very least on the loan. We have, as far as possible, prepaid all our loans.
Even housing loan also, if it's more than 9%, it's a stop. It's as simple as that.
And I think that may be changing in some of the next generation. And of course, your elder one he's already earning and things like that. But like what I hear with the newer generation is, they are okay. I mean, they've been trained to do leveraged investments. They've been trained to buy things on EMIs, etc. So maybe there may be some different approach with the coming generation, but what you are mentioning has been like a great recipe to ensure that the quality of balance sheet at a home level, stays spick and span.
I know it's not like we do any preaching and all at home to kids and all, but we kind of make it a point occasionally talking how we did, right? You're okay when it initially comes just take in sofa, right? No other thing. One by one we taken. We didn't straight away what car. We bought this particular thing. Initially we were okay with the two-wheeler, right? And he is also seen, right? And he also know very well, we don't take any personal loan and do any of those kind of things. And with all this thing also, you can build wealth.
Yes.
Okay, you can build. You need to. There's no shortcut, right?
So you did talk about the alignment on the saving side of things, but do you disagree on investments? And if so, where should you invest? And if so, who usually wins? Maybe Lakshmi, you can go first.
I think initially both of us were very aligned to real estate, and that has been our primary focus of investment. That's how we had chosen the path, and there was alignment. But I think somewhere down the line, there was slight shift where he was a little more prone to equity and he wanted to get into that space, but I still objected because there was a reason behind it. Because somewhere in 2000, initial part of his career, he had made some, I wouldn't say investment, but he had done some trading and he burnt his fingers. So my knowledge of equity is that you will burn your fingers or you will lose a lot of money.
Right.
So at that time, we were quite novice to the whole gambit of equity investing. So we said we will not touch it because we want to, I come from a very conservative thought process. So I said we will not go into burning our fingers anymore. So we will stay out of it. I think that's where some disagreements happened, and that was there for a long part of it. I would say from somewhere around 2012 onwards, this whole debate was there. Until there was a point where I started doing some focused research on this, which was much after?
No, initially there was no, like I said, no, there's a fixed salary coming. It's not like we both have started a career here, and once whatever we already invested in the house and the land and those kind of things. We thought we'll take an independent house, so we went and purchased a land. Okay, then we need to build the house and all this kind of a thing. Then a small incident happened up and security later thing. Then we thought no, independent house may be little risky. Then we thought no, we want to buy a flat. So it's all connected. So we happened to visit friend's place and all. So good community we saw. So we thought no, okay. So when you go the new place should be where kids should have enough place to play, right? Enough area to play. That kind. I don't want just a building. So very quickly itself we started, within a matter of 1.5 years itself we booked a flat also.
Okay.
Correct? That's how we moved. But obviously after some time there's thinking somewhere you start hearing about equity, compounding, long-term investing, you have to get quality one. So obviously like you said, it was there, because it's more of a fear of unknown. She was not exposed, and even it's not I was exposed. You're only thinking.
Got into that. But what made you come around on the equity side of things? I know you are still a big real estate investor. You prefer real estate as an asset class, but coming in from equity is really bad and where you could burn money or lose money. What made you shift to saying that hey, yes, it's we should allocate more?
I think I was more ignorant on that part of wealth management.
But was it COVID, for example? I mean, that changed?
A little before COVID, when you wanted a house and then you wanted land, and then we were passionate about a farm, so we also had a farmland. So then you start exploring, okay, what could be some other means? So, and we've been hearing about equity and people who have made money investing in stocks. It's not that we have not heard, but just that the fear of unknown. It's again the fear of unknown, that we were very ignorant about it. And since he had burnt his fingers also in the past, even I thought that's a very unsafe space until you do research. And then I started doing research around it. Okay, what is this thing? Because mutual funds were there and people were talking about how they've really made good money. So not everything would be bad money, right? So you don't know about it. Then I started doing research. So then I realized that initial part of it, what he done was pure trading. He had not done research about the companies, or he had really not done long-term investment. Yeah. And then I started doing research about value investing. So then you understand, okay, the power of compounding, what it is, and how real wealth can be made.
Another reason, real estate, so we started thinking, the kind of return we initially get, that is slow down in real estate, right? See, one main problem with the real estate, it's not very liquid, correct? We also don't have any situation we need to sell and take the money and all those kind of a thing. But it's always good. We know this is what we invested, this has become this, or at least market value like this. So whatever rate you calculate, it's a very good. There's nothing we need to go out and do something and all. But that's what we said, no, those kind of a thing is slowing down, right? So then obviously, what is the next best? Kind of return, we thought kind of return earlier, that will slow down. Then it forces us to think the alternative, right? So that's how I would say.
So I want to ask one very important question, and this is a question coming in from, we have got few clients who are, there are couples who come to us as well, but some of them are younger. Now, I want to ask you, would you want your finances to be managed differently? Would you want to merge the finances? Because the reason I'm asking this question is a lot of those couples who are in their early 30s, mid 30s, etc., they even don't want to share what kind of bank balances are they having or where they are making investments. I mean, we have that extreme that we are seeing.
You mean between the couples?
Between the couples, between the family. But so what is your thought process? How it should be? Do you think that everything should be merged? Or are there areas that should be separate, or it should be complete separate? Maybe just would like to get your views there. The reason I'm asking this is because it's a funny story. For some of those couples, it gets so transactional that they kind of say that, hey, if we are paying, let's say, 50K EMI, then I have to contribute 25K, you have to contribute 25K. I mean, that's how separate they manage the finances. And then they are comfortable with it. There's nothing wrong in it, but I just would like to hear your thoughts and views in terms of how you do it and how it should be done ideally.
I'm not sure what our ideal situation should be.
How do we do it today, right? I mean, is it all completely merged for both of us?
I think we belong to another generation.
Sure. Yes.
And we started our own everything. So we did not depend on our parents for anything. And for us, everything started from scratch. And we were of the opinion we need to build it ourselves, whatever we're making for us. So at that point in time, we did not think about these the whole fact of independent finance or. So I think for most part of it, I think if my income was towards household expenses, his income was towards EMI.
It's all fungible, right?
Yeah, it was like that. For most part of it, I think it was like that. And then whatever investments were being done at a later point in time, whatever was over and above our expenses, the savings was mostly managed by me. But sometimes I do feel that there is independence that is required. Not everything need to be told to the other person. I mean, especially where I would say that came handy was, I think I go back to the kitchen dabba concept. Where moms were very used to having some emergency funds.
Funds
saved.
available with them. Yeah.
So maybe that just comes to the ladies.
Right.
So I always used to have something which was not known to them. It can always come in handy in terms of emergency.
Crisis or emergency.
So I think that's something part of the Indian household
Right.
that we just take on,
Right.
not knowingly, but
Yep.
it just comes in. So I think
Yep.
there should be some independence. Not
Yep.
everything has to be discussed, not everything has to be told. The other person need not know what you're doing. Because ultimately, you're confident about what you're managing.
Right.
And you want to keep that confidence and that independence with you.
Right.
You need not let know the other person. I think that holds true for them. As
Yeah.
well.
No. I don't have any secret and all. First place, I don't have any my own personal bank account. Mine, everything is joined only. So there's no question of like no nothing else. I think it's a personal choice, right? It's all what is the independence and what is the security each person feeling. So I generally don't worry about all this too much, right? And to be very frank, maybe you also know, right? With whatever account we are managing, I didn't come even a single call. First itself I told like no, Lakshmi will manage, right? So generally I try to stay away. There are enough in our office itself to take care of all this stuff, and this is not required time, correct? You need time, you need to research, you do all those kind of a thing. Generally, I don't have that much time to do all those kind of a things, right? She does it, and she does a better job. So you trust that, right? It's very clear, right? You trust and move. So obviously, when you're doing any major decision, we anyway discuss. There is nothing like without discussion, nothing happens.
I think Malai, one very critical factor here is trust. You rightly said trust.
Precisely.
So, I mean, maybe of the 10 decisions I make in terms of investments, 8 might be okay, but 2 might go wrong. And tomorrow, if you're going to pinpoint that against me, then I wouldn't want to take it up. It applies otherwise also. So, you should have trust in the person that who is managing. Yes, it's very important. And you need to discuss it also.
You know, sometimes you want to manage some separate account to take care of emergency or crisis. The next generation thinks that I want to manage my separate account so that if I buy a Louis Vuitton bag or Hermes bag, I don't want my spouse to know about it. So, and that's where the trust factor comes into picture.
It may be for anything. If Louis Vuitton maybe bought out of that secret account, otherwise our money only going.
So we'll now switch gears and move into a little more technical side of the conversation, Prakashan and Lakshmi, and where I want to get your more technical insights as a finance professional. And let me start with you, Prakashan, first. So as a CFO, you have managed company finances, you have possibly a very complicated dashboard, you look at multiple KPIs. You know, how different is, you know, managing your personal wealth compared to managing, let's say, the corporate finance? And do you see a different approach in terms of how do you look at, you know, the company management versus your own personal wealth?
That is the reason I don't do it directly.
You found an easy way out.
But it is very important. Like when you, I'm not saying like when you, this is all nothing we are doing a short-term investment, right? It's all a long-term. You can't look at on a daily basis. In office, like no, there are some dashboards like no, it's a real-time dashboard, morning, afternoon, evening. You look at a daily dashboard, weekly dashboard. All here, you don't need to do it on a daily basis. That's what my personal thing. But any investment you are doing, right, there should be a lot of research, whether it's a real estate investment or it's a equity or any other thing, research, you know. See, people think like, no, real estate you would select and do, right? If people don't know, when we buy a property, we would have seen 200. Yes. Trust me, that time every weekend, right? We both used to go and see all the property, this thing, and different places. We'll keep looking at it. So we see so many things, then only we say, okay, this is fine, that is fine. Right? There was a time like we always have a small diary. So you want house owner, when you decide, we go and literally measure kitchen, breadth, length, powder room, attached bathroom. No, everything to that extent we get then we here that particular property we like this property we like this. I'm just giving us an example, right? So no need to talk about equity investment. You have to research there are how many 3,000, 6,000, I don't know, whatever, so many companies are not listed. Out of the which one to do it, which one is doing well, and that research is a continuous process. But dashboard, I don't think I don't know. I don't check it. I know whether she check on a daily basis or not.
Not on a daily basis, it's not that you monitoring it on a daily basis, but of course you go revisit your portfolios, especially when it comes to equity. At least once a quarter, you just revisit your portfolios. And I'm a firm believer of long-term investing or value investing. So I have filtered based on certain criteria, certain companies that I would track, and then I would go revisit them.
Right. On a quarter-on-quarter basis.
On quarter basis, how each of those companies are doing and how they are doing with respect to my investments. How am I faring in terms of the investment? And yeah, I would definitely revisit it. And real estate, yeah, I mean, it was the initial part of the research that we had done when we had done, but post that, there's not much of a research that we do unless we're going to get into something new.
So I want to double down, Lakshmi, on your investment, personal investment style. You did mention that you like value investing, you like long-term investing. In fact, most of the real estate investments are typically long-term. But maybe can you elaborate on your approach? How did you come about saying, hey, this style is something that works for me the best? And then with that particular style, were there certain asset classes, which you prefer, right? I mean, of course, real estate is something that you have a strong preference towards. Equity, of course, is now something that you have added more and more aggressively. But can you elaborate on how did you come to the value investing as a best option available?
Okay. I think that's more out of the kind of personality I come with. I'm slightly conservative and slightly risk averse. So trading was a given no. I was very clear about it. Especially we have had bad experience, and also from what research I had done, I knew that was not what we were looking at. That's not something that would give us the kind of wealth that we are aiming for. So trading was completely no.
And I think I want to also make a call out to all our audience as well, that if you are trading, that SEBI came out with this number where 93% of the people actually end up losing money and only 7% make money, and 7% people who are making money. The interesting part is they are making money less than the FD returns. So yeah, I think that came very intuitively to you, but I think that's the right advice for also our audience as well.
So given that, so it was when you keep the long-term investments, what were the options? What was your asset options? So there was real estate, obviously. Then you had commodities. You had gold, silver as commodities. And then you had equities, and then you had debt. So these were the broad four classes of assets. This was during the research phase when I was going into it. Now, gold is something that I invest as a jewelry. As a typical lady of the house, always like to invest in jewelry.
And you have always been proven right.
So I have not seen gold as a commodity.
Right.
Then I was left with equity and now within equity itself. So I think the initial part of the research that I had done was Warren Buffett's books. I read about him extensively and some of the shareholder letters that he wrote.
Right.
We are widely talked
Right.
about.
Right.
So I'd gone through that and how he had spent hours and hours only reading on that
Reports, yes.
And today we are in a digital age. So a lot of it is available at your fingertips.
Correct.
You really don't have to scum through so much of that.
Correct.
So as long as you have basic understanding of the numbers, you can do number crunching. There are certain basic ratios that you have to see. Do the number crunching with that. And then look at the business model of the company. So I was very interested in understanding each company's business models. Then I came up with some filters for my based on how the companies perform, how they grow this, how they are leveraged. So there were certain parameters that I set as your target for myself.
Right.
Return on capital and return on equity. So these were parameters based on which I filtered out certain companies, and then I came up with a company list that I could track, which is 250 to 300 companies. That
wow, you track so many of them?
Not on a very regular basis,
but
at least
once a quarter.
Yes, I go through them.
Oh, that's fabulous.
How their growth patterns are. And then eventually, I will know that these are all but the rules of value investing.
Right. That's
so awesome. I had my thumb of rule on how the company's growth was I mean, even if they are in certain sectors, it was a no-no to me for my own reasons. And then there were certain sectors that I deeply invested in because I thought that they would be growing at a farmer's pace.
Sure.
Pharma, for example,
Mm-hmm.
or chemicals.
Mm-hmm.
Yeah, manufacturing, I think, is going to come up big in India. But my focus has largely been on large cap companies,
Large cap.
large cap and mid to large,
Understood.
because of the risk averse capital that they come with. Because not much is available in the market on small scale,
Yes.
small industry, or small cap companies.
Right.
So I think integrity is something that you can't
Mm.
read and
Compromise.
understand
Yep.
about the management.
Yep.
So which is why I've kept my portfolio very less on small cap companies. It's largely focused on the large cap,
Large
where
caps.
more data is available in the market, the pre-market space.
That's
where I
fabulous.
can do more research.
Yeah. Yeah. No, but I think those are all great principles. I think clearly, integrity is important. Availability of information is important. Some of the growth patterns are important. As you rightly mentioned, some of the ratios around return on equity, return on capital employed, I think those are all important. So I think some really great inputs there. Let me come to you, Prakashan, on the question on asset classes and asset allocation. Now, when you look at your overall net worth, you are, of course, invested across multiple different asset classes. Is there a ideal allocation that you have in mind, based on your current age, etc., and where you should go towards? Like, for example, if there is a total net worth is 100, ideally in your mind, how much split should be in equities, in potentially in gold, let's say minus jewelry, or or equities, and within equities, let's say how much in mutual funds, etc. Is there kind of an ideal map that you have? And then how do you look at asset allocation, right? Let's say if you are having 100 to be invested every month, what would be your kind of split that you would drive from that incremental investment as well?
See, initially it was skewed towards one particular class, right? Now you're conscious no, that skewness should not be there. We should be split. So broadly what we look at is need certain liquidity as you go forward, right? For monthly or that expenditure or certain events coming and all this stuff. For that, whether I am having it, okay, what will provide that particular thing. So that way we are conscious, right? Where and all we are doing it. If I don't have liquidity and how quickly we move. Beyond that, I don't look at much. I'm happy, overall wealth is increasing it, right?
And is there a monthly allocation that you drive systematically from an investment standpoint?
Yes, I think we're pretty much collaborating with you on that. So we have some fixed allocation going towards equity, and one area that I personally wouldn't have tracked much is the commodities side. Commodities, though we have been hearing gold is giving you good returns, then another area that we thought we should give a little more focus on the debt funds, because that's more the assured returns, assured monthly returns, if you have to say at later, given our age span. That is something that we want to look at. I think for each person, the risk appetite is different.
Of course.
And also the return appetite is different. So younger the age, you can look for more returns. You can be more very aggressive on the equity side. But at a given point in time, then you want to have a diversified portfolio, which will also cover up for your monthly expenses going forward. So that's something that we would like to see from a debt side. So which are those debt options that will give you better returns?
And even real estate also, mostly everybody think flat apartment or real estate also you need to further break, right? One is obviously apartment, right? Where it is possible to easily rentable, right? Those kind of a thing. You'll have a residential plots, okay, where you can lament and those kind of a thing will be there. Then you have commercial thing is a good thing.
That's a good point, Prakashan, because I just want to pivot and ask a question about some of the alternative asset classes, right? Within real estate, you mentioned the whole farmland, and I think before folks who are in Bangalore, they've all been hearing this advertisement on radio called Hosa Chikuru, etc., which has been a successful model. So I think maybe would you have some advice on some of those alternate asset class like farmland? You have been with startup yourself. There's a lot of interest that we see from people coming into the unlisted space. It could be pre-IPO as well, or it could be, early stage startup investment. Maybe what is your thought process about some of these alternative asset classes? And how would you go about it? Like commercial real estate is another one that you mentioned. Now, people are coming up with the commercial real estate AIFs as well, where the buildings are being professionally managed and people earn the rental yield from Class A tenants, and then they also get the capital appreciation at the end of their tenure. Just your thought process on some of these alternate asset classes.
Oh, the AF is actually a good route. My suggestion, even who are going for this startup investment route, rather than investing in specific communities, the companies, this kind of a asset fund, right? Through them investing in multiple places, it's a good option, right? With the right place. And farmland, obviously, I am very keen, and I generally spend a lot of time in converting currently non-agricultural land to barren land to farmland, right? So there we can develop the way we want it. We have a lot of flexibility on that particular thing, and barren land cost-wise question may be relatively cheaper. Okay, otherwise people say no, the land has some 100 coconut, this many tamarind tree, this many that, which you may not require, but we'll end up paying for all those kind of a thing. Depends, but there again you have to look at which area you're looking at it, what is the land, water availability, soil conditions, and there are multiple things. How easy it is to reach.
So I would just want to add that the aspirations of people keep changing. So I think during our early ages it was having a house, and then maybe expanding that to another house, and then owning a small farm for yourself. That's where it started. But today I think the next generation which is going to come is going to come with some level of standing on their own, and they would have some kind of foundational work done already. So then for them it's about experiences and exploring a lot of other new things. And farming is going to come back to India because sustainable living is going to be there for sure. If not in the short term, but in the medium to long term, it has to be the way of life. So then when it comes to this experiential living, then I think people more and more are going to go forward towards those. So they would want to have an experience during the weekends in a urban land, and then during their weekdays off, they want to be in a rural setup where they're actually putting their hands in the soil or growing their own food. I think that is where we would evolve over a maybe medium to longer period of time. So that's going to be one of the paths going forward.
So one question I have is, when we talk about this asset class, I would want to get your opinion on what's your market outlook, let's say, for the next 3 to 5 years. Now, we have, of course, come off after COVID. We had a fabulous run from 20 to 24. Of course, last year we have slightly flatlined. But when you do this research, what do you think, what is your outlook over the next 3 to 5 years? And are there sectors that you kind of prefer, you like, or are there, asset classes where you would want to do more disproportionate allocation as well? Maybe your thoughts.
I think I would go back to the same India growth story that everybody's been talking about. India is definitely born to grow, and we have a huge middle class who is growing middle class. So consumer spending is definitely going to be there. So that would give us a good economic boost, at least for the mid to long term. That's the way I see it. And personally, from the research that I've been doing, I think manufacturing is a sector which is going to really grow big, given China plus one. That's one of the areas, but even otherwise, we have to see. Services, we have done our fair bit of journey. And now with AI coming in space, now the journey for services is going to be in a different level play. But then it is going back to your other industries. So then manufacturing and agriculture. Agriculture also, India has.
Right.
1.4 million people, and then now the focus, I think there is going to be a bit of premiumization there as well. So what used to be available as a commodity, now you will have certain things which are premiumized commodity. So that's another area, because initially when we were thinking about Atra Organics, or when we started, so we started with tomatoes, and then we tried our hands in flowers. We have put our hands dirty into each and everything, and then finally we thought to manage what best it is when you're sitting offline in a place and you have to go visit there. We zeroed down on fruits as a niche area, and especially mangoes there currently. And what we thought that we wanted to give good products. We were very clear about it. But when we started out, we had no clue about what the market would be like or what the market might want. But we just ventured out. But our focus was only on giving the best quality product, whatever be it. But you would be surprised. It's about 5-6 years since we have been supplying to the market here in Bangalore. Every year the demand has only grown. People are willing to pay for that extra premium that they are getting. So when it is a quality products, then people are willing.
Right. Right.
They want to get good quality. This applies across all sectors. This is about every other product. It could be groceries, especially when it comes to health. People are becoming more health conscious and quality conscious. So the premiumization is going to be another big thing. So anything that you give in good quality and the best that suits their health, that's going to have a big uptick. So that is one area. Manufacturing is another area, and I think pharma also India will really do big because we have a good foundational growth. So it's to build on top of it.
Manufacturing, pharma, and agriculture, and then premiumization is a broader theme, is what you are saying. Prakashan, let me ask you a question on the sector side, more from a technology perspective. Given that you are now, you're seeing multiple phases of evolution of IT services industry. Now you are in a product company, looking at the SaaS business. You are seeing the evolution of SaaS business as well. Now some of them evolving into AI companies, etc. What is your view on the tech sector from an investment standpoint over the next 3 to 5 years? If someone has to invest in the sector, where they should look at opportunities, they should invest in large companies, small companies, private companies, unlisted companies. Maybe your thought process there.
See, more than IT services and all, right? Any non-linear type of IT, right? Generally, I am quite bullish on the opportunities, correct? I don't know like which company do well and all those kind of a thing, but this as a sector will definitely grow. Correct? That's the reason I am also sticking to that. That is the reason I am working in this particular more than IT services, right? Product platforms. It's a non-linear. They use a tech to provide non-linear. It's not a body shopping or a people-based billing and all this. It's not like old T&M or consulting, those kind of a thing. So where it is purely based on outcome driven or service based or anything in non-linear. So that generally I am bullish, and it is going to stay, right? AI will come,
But you are still bullish on that overall space, right? And it's a product space, and now we are seeing even more and more companies also listing on the Indian Stock Exchange in that area as well.
I'm not saying like specific this company, that company, and all that, but this sector will definitely grow.
So let's change the gears. In this section, we will try to go a little faster, but I'll probably get one quick point from both of you. So which is more about the mistakes, for example, that you have made, right? So if there's one financial mistake you made, as a couple that taught you a lesson, what would that be?
I think for most part of it, we've discussed that. We would have started early on in equity. Yes, that is one clear mistake, I would say, that, as a couple.
So let me ask you, Prakashan, have you ever made an investment? When you made an investment, some doubted, some friends said, oh, not a great thing to do, or family said, why are you taking this risk, etc. But later it turned out to be a winner.
It's kind of always.
With real estate or
I still remember when we first 2004, right? We saw this particular property, right? We were at that time living in a rented place in RT Nagar, and she was working in ICICI Bank and MG Road branch. We saw a property in Karpura. So there we went, people are so far. This, you bad or what? This thing. And first place, no, that is what we can afford. And we went and looked at it. In fact, not a single person told us to invest.
Okay.
Not a single person.
Okay.
Right? And one day I still remember, in fact, Lakshmi and myself, right? In that time I had an Activa, right? In that Activa from MG Road, we drove there. It's only 10 or 11 kilometers. There is something, either we are mad or these people are sick, right? We went and did, and that gave a
brilliant returns.
It's a good return. So that way, every place, it's a people, this far, there, you get. People I think now we stop checking with people, right? No, this is the thing. Okay.
Fabulous. So actually, if I show one question on the expense side, let's say if we were to look at your last 30 days of expenses, and if we had a peek at it, what would surprise us, or maybe Prakashan also, the most?
I have to say, he might say it's a splurge, but what we are doing as a splurge, I mean, it's not that you do it often. I mean, last month was a month of festivities.
Onam, yeah, happy by the belated Onam now, but
so it was a month of festivities for us. So what I might have bought for one Onam, I would have now bought for 3 Onams together. So I think the degree of spending, yes, of course, it has gone up. That I would say is that would come as a surprise.
No, it's not like we don't go out much and all the thing. Maybe one time or something go out for in a month for some dinner or something like that. No, it is not like and we are not a party guys and all. Two things I will say spend on the agriculture side, farm side it's a startup. Money only goes. Cash flow not match. So that way it was not there sometime back. Now that is very high. Then now, like you said, certain cases intelligence a little more, where they can buy with one pair, two pair of some dress, he'll go to 3, 4 and all, right? That is avoidable. So sometimes we'll end up seeing something in the cupboard madam bought 2 years back, still not gone. Some occasion has not come. Then occasion is not the why you are buying the first place.
So that brings us to the little concluding section of our podcast. And I want to ask a little more of a forward-looking question, which is, of course, now you reflected a lot in your early days, how you grew and how your investment, spending, saving habits have changed. But let's say if you were to look forward 20 years from now, and if you were to think about, what's like truly that one area of wealth that you have built, not only in money terms, but possibly also in kind of generational terms as well, what would you really like that to be?
I like that generational terms word. Right. In fact, to be very frank, that is my secret aspiration, all those kind of a thing. Right. Family office.
Yeah, brilliant.
Maybe not be now. Maybe after 2, 3 generations, they're like, okay, these people started something, those kind of a thing. So I may be wrong. I don't think everybody can. They'll earn a lot of money, but I don't know everybody can create wealth. There's a difference, right? There are a lot of money earning and they're living, and there are a lot of concept also there. You earn everything while dying, you completely finish, then you go. At least I am not in that particular school of thought, right? They keep telling kids also, right? Everybody will not be able to get. So wealth distribution should be so we create something which will be able to give employment to people, correct? So that way do something is sustainable, and maybe another 10,000 acres of sustainable farm.
Lovely. That's a brilliant goal. Manikoth family office and 10,000 acres of Atra farming. And one final question in this category is there's one term which is becoming popular these days, which is FIRE, which is financially independent, retire early. Now, of course, you can become financially independent, but there is always a purpose that we all have from a work standpoint, right? So what would your FIRE goals really look like?
No, for me, there's no fire. Fire only is there. Financially, one need to be independent. Everybody need to be independent, right? I don't know what is this retirement really means, right? What do you do, right? See, it can be maybe salary job you return, but I feel people need to be gainfully engaged, right, till their last breath, right? As far as possible, kind of a thing, right? So that doesn't mean the people have to income has to keep growing, but people should spend their time gainfully engaged, right? So there's no question of retirement now, sit and go to Hawaii beach and do surfing and all. At least I don't think she'll go without me.
He's dreaming. I do solo trips and I do trips otherwise. You definitely need to be engaged. So it need not be actively working in a particular place, but you can do something on your own. You can start something on your own. I mean, one purpose for me was to help him with the farming. So when he started farming and I saw a lot of spending going there and no money coming out of it, that's when I said, okay, now I'm going to be there.
Make it economically efficient.
You need to have something to monetize that. It can't be all spending. Of course, you have that passion and you're driving it day in, day out. You're putting all your efforts and money into it, but it cannot be something which is a black hole where money just goes and nothing comes out. So you need to monetize it. So that's when I thought, I should also then get into that part of it. Maybe I'm not so passionate as him in farming, but I'm passionate about the money making part of it. So, but you should be engaged. You should be doing something till the last breath, is what he said. Until you do that, you're not alive. To be alive is just not to live. You should be doing something. Yes.
So we'll come now to the final section, which is our rapid fire round, which will be the fun section. So don't think too much, just give whatever answer comes first to your mind. And let me start with you, Lakshmi. So What's one thing you would never compromise spending on?
I think health.
Great answer, Prakashan.
Children education.
So, Prakashan, if you had a suddenly big windfall, say an ESOP liquidity event, what's the first thing you would do with it versus what your partner would do?
Partner may go to some jewelry shop and sari shop. Jokes apart, right? I'll do, if it comes, if cash wise, next moment we'll put in some liquid fund. After that thing, like, where to put, what is the kind of a thing we'll do it. Then I have this 10,000 acres of sustainable farming.
So, in this question, again, both of you can answer. So, who is more likely to buy something expensive without thinking twice? You could maybe point at each other.
He's quiet.
You got the answer.
Who is more likely to negotiate a discount?
I think that both of us are reasonably good. But I've noticed one thing, right? Sometimes when we, certain things we wondered, that time the discount, that the Josh comes down.
Who is more likely to panic sell in a market crash?
Neither. Panic sell.
Neither. Okay, fabulous. Who is more likely to surprise the other with a splurge gift?
Absolutely not. Absolutely. I'm an accountant.
Well, you're accountant. What about you, Lakshmi?
I wouldn't mind.
So let me ask you, what was your first ever splurge with your own salary?
I got an AC for my house in Chennai.
How about you, Prakashan?
First salary, I bought a washing machine for my home.
So what's your partner's most non-negotiable expense? Maybe you can speak for each other.
I think farm. I don't have any doubts about it.
How about her?
No, whatever she thinks. So I never try to negotiate. Right?
Final question. What's your dream retirement plan?
My dream, I don't know, 10,000.
10,000 acres of farming.
Mine, I think, is to monetize it just much.
I think that's the most important part.
Yes.
I mean, that's a fabulous note on which we are ending, this particular podcast, because it's all about how finance professionals think about money. It's, monetization comes first. Passion, of course, comes before that, but monetization has to definitely come thereafter. With this, we end this particular episode. Once again, thank you so much, Lakshmi and Prakashan, both of you coming on this podcast. And I'm sure there are lessons that our audience would take away from this particular podcast as well. Once again, thank you.
Thank you.
Thank you for having me.